And in the U.S., stock index futures fell ahead of Tuesday's open as investors focused on geopolitics. Around 5:50 a.m. Eastern Time, Dow futures dropped 102 points, indicating a negative open of 70.07 points, while futures on the S&P 500 and Nasdaq both indicated signs of a downbeat open for their respective markets. And investors around the globe continue to show signs of cautiousness amid trade and political developments. Last Friday, President Donald Trump said he was ready to go on hitting China with an additional $267 billion worth of tariffs. China is reportedly set to call upon the World Trade Organization soon for authorization to inflict sanctions on the U.S. In data, investors will be paying close attention to the job openings and labor turnover survey following last week's non-farm payrolls. JOLTS are due out at 10 a.m. Eastern Time. Meantime, the NFIB Small Business Optimism Index is due at that's out 6 a.m. Eastern Time, while wholesale inventories are expected at 10 a.m. Eastern Time. No major earnings or speeches by the U.S. Federal Reserve are scheduled today. And in Asia, markets were mixed as Hong Kong's Hang Seng Index ended the trading day in bear territory for the second day. In the Greater China markets, Hong Kong Hang Seng Index closed lower by 0.71%, dropping by more than 20% from its highs in January 2018. And over on the mainland, the Shanghai Composite lost its earlier gains to close 0.18% lower at around 2,664.80, while the Shenzhen Composite climbed 0.172% to end at approximately 1,409.34. The Nikkei 225 extended its gains to end the trading day up by 1.3% at 22,664.69. South Korea's Kospi, on the other hand, closed 0.24% lower at 2,283.2. In Australia, the ASX 200 closed higher by 0.62% at 6,179.7 as the financial sector rose by 0.85%. And to commodities now. The monitoring committee set up by OPEC and non-OPEC producers is already set to meet in Algiers on September 23, but they have now scheduled yet another meeting for today as the coalition attempts to come up with a new production strategy. The six-country Joint Ministerial Monitoring Committee, which is chaired by Saudi Arabia's Energy Minister Khalid Al-Falih and includes ministers from Russia, Kuwait, Venezuela, Algeria and Oman, had been scheduled to hold a conference call on Monday, but this was cancelled and replaced by another meeting for today to assess market conditions and discuss the coalition's next steps. Nosike Wajdi, one of the research analysts at Financial Derivatives Company, joins me now to tell us what to expect from this extraordinary meeting, if I would call it that. Good afternoon, Nosike. Thank you very much for joining us.
Good afternoon, Chimezie.
So what do you think will be top on the agenda from this meeting today?
Well, top on the agenda of every or any meeting between oil producers is always strategy. Right now, the OPEC and non-OPEC coalition will assess current global market conditions and deliberate on next steps, which is obviously production strategy, especially as November approaches. November is when the ban on Iranian oil exports will officially begin. But right now, there's a growing fear that global markets are already beginning to tighten faster than anticipated. The ban is not till sometime November the 4th, but signs are emerging that the production in Iran fell by about 600,000 barrels between July and August, and we expect it to fall by 800,000 barrels in September. This is faster than was initially anticipated, and obviously that fall in supply, the OPEC and non-OPEC producers will deliberate on the strategy to increase production by November, or even to increase production before November. So that will be top on the agenda.
Now, considering the potentially depressing impact on prices, is a decision to raise output likely?
Well, at the last meeting in June, they agreed that they would raise output by 1 million barrels a day. given that some countries are unable to pump more and some countries are able to pump more than others, splits emerge on how to proceed about this output increase. So I think the deliberations will be more about who will increase and by how much between the OPEC and non-OPEC producers. Basically, the OPEC producers, okay, it might be a split 60-40. And then in 2 weeks or in less than 2 weeks' time, when they go to the OPEC meeting, then they will agree that 60%, who gets what, between who and who. Obviously, Saudi Arabia is the biggest producer. It used to be the swing producer in the cartel. And it has spare capacity of slightly less than 2 million barrels a day. So it's expected that Saudi Arabia will take the bulk of the increases. But mainly, we don't think that any increase in output is likely now. They'll probably wait till towards November.
And will an inability to reach a consensus decision threaten the future of the coalition?
Well, the coalition itself is built on a common goal of oil market rebalancing. The higher prices we're seeing now, prices have stayed somewhere between $70 and $80 a barrel. High prices we're seeing now are testament to the fact that OPEC and non-OPEC producers came together sometime last year and they forged a goal and have stuck to the goal. So the question of a threat to the coalition, I mean, the producers know what they have to lose. They know that if they stick together, if the markets know that, or by any chance, know that there's a likelihood that OPEC or this coalition will be dismantled, the markets will react negatively. So they will stick to their guns, even if it means that some smaller producers who are already struggling with fiscal and budget deficits would not get any increase in allocation. But I think that the common interest will override individual country interests, and the coalition will stick together.
All right, thank you for your time, Nosike. Nosike Nwajide is one of the research analysts with Financial Derivatives Company. We'll take a quick break, and when we return, we'll cross over to the Nigerian equities market for update. Just stay with us.